Peter Eliades with you. This is Stock Market Cycles Update for Tuesday, April 28th. We have some good and bad news. Well, it depends what your perspective is. As those long-term watchers out there know, we have taken a break every 4 to 6 weeks for several days. One of the main reasons is because we still do a report every 4 to 6 weeks for paying subscribers. Do you believe that? People that actually pay to get this information? Anyway, we do that every 4 to 6 weeks, and sometime in the next several days we're going to be publishing a report with, we think, some very, very interesting charts and observations. And when we do that, in fairness to people that pay, used to be subscribers, but we no longer have subscriptions, we halt these updates for several days. In fairness, as we say to those that are paying for the information that we give them. What we will do is when we've sent the report out, we will do a very quick video and let you know that it's available for you on our website, should you care to see our latest report. You'll have to pay for it, but not a huge price to pay after watching the free videos for, I guess, 6 months now. It's only $19.95 for a report. Anyway, today's report is going to be quick. Let's answer some of a lot of questions. This is actually a good one for me to pick, but people keep saying, well, what percentage of these projections are met? We're going to be able to tell you that once Stefan and we get to the next stage of our program. That's not going to be in the initial release, but ultimately you'll be able to do all these statistical examinations of the projections, what percentage have been accurate, and it's going to be a fabulous thing to be able to do. But I thought quickly when I looked at this chart today, this is the version, the intraday version of the chart we showed you yesterday. Remember the 3.5 to 4 trading day offset, which gives you nominal 10-day projections. We showed you the closing projections yesterday. These are intraday today. And look what happened. This is the S&P right here. The intraday box called for 2907.37 to 2927.98, and the high for the day was 2921.15, right in the projection box. So on an intraday basis, the upside projections have been met. As you know, the S&P and the Dow closed down slightly today, and they did not reach their closing nominal 10-day projections, so they are still outstanding. But the reason we wanted to bring this chart for you is twofold. Number one, to show you the intraday projection had been met, but the number one reason to show you the chart is when you see a gray rectangular box, that means that a projection was invalidated. And in this case, you knew that very, very quickly. You got outside the box here, you gave the projection the next day. You knew there was at least a preliminary invalidation. But I'm not going to go through all the instances now. I simply want you to count the colored red or green boxes going back. So, in fact, first let's count all the boxes. They have to be rectangular boxes. If they're gray, it means there was an invalidation. So we have 1, 2, 3, 4, 5. What a great series of projections, very short term here. 6, 7, little one here, 8, 9, little one here, 10, 11, 12. Let's go one more over. 13, 14, 15. I did those. As you can see, the count here is not as good, but we're going over the last, well, let's say from the beginning of the year, which is 4 or 5 months. We have 15 that were colored. Now let's count the gray ones. 1 right here, going forward to the right now. 1, 2, that's it. 2. So 15 out of 17 projections were correct. 15 divided by 17 is 88% correct projections. Don't expect that. We're not going to predict that there's going to be that kind of accuracy in this program. But I wanted to show you that in a series that we go back and look from the beginning of the year, we're coming into the 5th month pretty soon. 15 out of 17 of the projections given were met. Look at this series right here. This one to the downside met. This one to the downside met. This one to the upside met. Now, when they meet them and go further, that simply means that a longer-term offset could be giving the next longer-term projections. So we're going to leave you with this. Here's what you know. You know that we have significantly higher projections. This is nominal 10-day, nominal 20-day, nominal 5-week, and this is the big one here, the one that remains outstanding to the upside. And as we theorize, we may well come sideways to down into May, and probably down into this area somewhere. And at that point, we'll look to the next longer term offsets. At that point, if we come down in here, then we can cross these offsets around the same level as these upside projections were given. This is all not even theory. This is all conjecture, as we said yesterday. So, but I think it's good conjecture, and it's one of the possibilities that we're looking forward to. So that's going to be it. We're not going to be doing updates for several days here. We hope you miss us. And as I said, we'll do a quick update once our report is written sometime in the next several days. And we'll be back sometime next week with regular updates again, because we're not through by a long shot. We hope you've been enjoying them. Please give us some favorable commentary down below if you see fit to do that. In the meantime, keep an eye out. If you're a subscriber, and if you haven't done so, bottom right, click on the red banner. You'll know exactly when we do another update. Thanks for watching.